The Floor Academy podcast is sponsored by Trelama, the trade labor marketplace, where businesses can find skilled trade labor, such as flooring installers, and where flooring installers and other skilled tradespeople can find permanent or project work. You can set up your profile at trelama.com, TRALAMA.com, or download the app from the Apple App Store or Google Play. And remember, Trelama is always free for skilled tradespeople. Welcome to the Floor Academy podcast. I'm your host, Kyle Hadeen, owner of Illustrious Hardwoods in Phoenix, Arizona. Our mission is to get you from playing contractor to running a successful and profitable business that supports your dreams. We are here to talk with flooring professionals from all over the country about the issues that matter to you. I want to encourage you to learn while you earn. Don't forget to check out our website and merch at flooracademypod.com or to become a patron over at patreon.com/flooracademy. Even $5 a month goes a long way to help this content to continue to be published. There are links in the show notes. This week's guest is John P. Diarco. John runs his own law firm, specializing in real estate, estate planning, and taxes. He is also a certified public accountant and an enrolled agent with the IRS. I speak with John about the differences between enrolled agents, CPAs, and tax attorneys, as well as some potential tax-saving advice for your company. Don't miss his quick tips at the end on what can really help your business out financially. John Diarco, are you on the line?
Yes, I am.
Awesome. Welcome to the Floor Academy podcast. Thank you so much for joining me.
Thank you for having me. It's my pleasure.
Oh, excellent. This will be a good one because the point of the podcast is we focus on business development, but talking with other flooring contractors is a passion of mine. But sometimes we need to get outside of that box and focus on other areas of our business. And a big one that's missed is taxes, and that happens to be a specialty of yours.
Indeed, and that is a big one, and it's not one you want to overlook for too long.
No, not at all. I ended up in a bad place at one point with the IRS because of I was doing all 1099 contracting while I was in the film and television world. And I had the money to pay my taxes until I didn't work in November, December, January, and part of February. And all the money that I had saved up to pay my taxes was then spent on supporting my family. And then the tax bill came, and then you owe them money. And I discovered that I would rather owe money to the mob than I would to the IRS. So,
well, I'm not so sure I would go along with that, but certainly, if you owe the IRS, that could be a problem. There are ways to deal with that, but if you don't deal with it properly, it certainly can bite you in the backside, as they say.
Yeah, it was brutal. That's why I'm saying I rather would have had my kneecaps broken by the mob. Like they set up a payment plan, right? And usually you set up a payment plan and the amount you owe goes down, and the amount kept going up. And it took me months of calling and fighting and complaining with them because I was young. I didn't really know what was going on and if I needed help, and I probably didn't have the money to pay for legal help. And eventually one of the guys on the phone was like, "Didn't anybody tell you should take out a private loan and just pay this off and then you would save way more money?" And I was like, no one ever did that. So I went and asked my dad for a big old chunk of money and paid them their chunk of money and then slowly paid my dad back. And luckily he didn't complain when, payments didn't come in and stuff, but it's ugly, and it's easy to fall into that situation, especially running your own business when you don't know how to keep track of your money and account for it, and then you get this big bill and you're like, but I can't even support myself. How do I pay the bill? So let's
Well, the IRS does have programs that could allow you to, like you said, an installment agreement. There's offers in compromise. The only thing is, if you try to, get into one of those arrangements with them on your own, you should know that they're not really there to help you. They're working for the government, and they're looking out for the government's best interests, and not yours.
Yeah, no, for sure.
So there are, they'll say, well, I want X amount of dollars per month if you're going to do an installment agreement, and oftentimes it's not. It's an amount, a monthly amount that is, not practical.
Mm-hmm.
Like, there's going to be months where you're just not going to be able to pay this because it's too much. And so, that's why it's a good idea to have a real experienced professional, tax professional, to go through all of your, IRS has these forms that you fill out that are like, they're sort of like loan applications, has all this information about your assets, about your income, monthly expenses, and there's rules that they have that go along with these forms, and an experienced tax professional that, represents people before the IRS, that could, understands the rules, understands how to keep you within the rules,
mm-hmm.
and hopefully get the result you're looking for, which would be a lower payment. Now, somehow it sounds like in your case you may have done that, but it also sounds like your payment was lower than the accruals that occur every month.
Correct.
And the accruals are the penalties and interest for having that balance sitting out there in the first place. So, because it was due April 15th, following the year, whatever year we're talking about. So,
correct. It was ugly.
Yeah, and so those accruals, of course, will is sometimes, depending on your financial situation, that is reflected in those forms that I was talking about, that are like loan applications. Depending on those amounts, sometimes it can justify a really low monthly payment, yet the accruals are more than the payment itself. So in that instance, you're really not getting anywhere. You're just kind of putting it off till, which is not always bad either, but putting it off and looking for other options that might, if the facts are, your situation changes, let's say, and it might be more conducive to maybe doing an offer and compromise,
Mm-hmm.
So each one of these cases, we look at on a case-by-case basis.
Yeah.
It's hard to just generalize because everybody's financial situation is different. Mm-hmm. And so how, that particular person's case might go will depend on that person's, in large part on their financial situation.
No, totally.
And the skill of their, representative.
Well, yeah.
Whether,
And I think that's what I learned was the more I've learned as I've grown this current business that I have is it pays to pay a professional. That's why I partner with them and bring them into my fold, is because I'm not the expert in that area and they are. So it's worth the cost of their expertise in order to make the situation that I'm not experienced with go smoother. But before we get any further into this, I haven't had you introduce yourself yet, and we're like 8 minutes in, so I apologize. So go ahead and introduce yourself. Let us know who you are, what you do, why you do it. Give us that like 30,000 foot overview of who John DiArco is, and then we'll keep this going.
Okay. Well, I am John P. D'Arco, John Philip D'Arco, and the reason why I want to throw my middle name or initial out there is because there are a few other John D'Arcos floating around out there, and some are even lawyers. So I don't want to get confused with anybody else. But I am licensed as an attorney in Arizona, Illinois, and the District of Columbia. I'm licensed as a CPA, Certified Public Accountant, in Arizona and California. And I'm also I'm licensed as an enrolled agent. And an enrolled agent, a lot of people are always ask, well, what's an enrolled agent? That's a federal license in tax, and a holder of that license is permitted to practice and represent taxpayers before the IRS in all 50 states. So, through that license, I'm able to represent people in all 50 states. I have clients from coast to coast. And so because of all these licenses I do also have a California real estate broker's license, and I use that just occasionally on certain instances on certain things in California, real estate and business transactions. So, but the, what was I saying? The enrolled agent's license is a federal license in all 50 states, and I have clients from coast to coast. Where I was going with that is I have, because of where my licenses are, I have an office. My main office is Phoenix, Arizona. I've got a satellite office in San Diego, another one in Chicago, and another one in Washington, D.C.
Okay.
So depending on, where the client, usually a lot of my clients come by way of referral. And so I have contacts and from, nationwide referral services, things like that. So they send referrals to these respective offices where I'm licensed.
Okay.
So, and for tax matters, I advise people in all 50 states, so, but.
Okay. So let's go ahead.
I was just going to say the enrolled agent's license is like the key to get into whatever state to be allowed to practice there. And, but then I bring with it all the same skills of being an attorney and a CPA with me. So, so it has that benefit.
Yeah, you're definitely bringing you're good. You're definitely bringing a lot to the table when if you're just able to be an enrolled agent in the state, but you have that other expertise, you're definitely bringing a lot to the table for somebody. So what I wanted to do was, so I want to kind of break down the difference here between an enrolled agent, a CPA, and a tax attorney, because oftentimes, right, we get our taxes and we're not organized. So if you're not organized, go back and listen to my episode way long ago with my bookkeeper, Janice Nordenmark. She's amazing. And get yourself organized so you're not handing somebody a box come, March 1st or something that's full of receipts, and get yourself organized so that you actually can hand them some numbers. But once I give this person my numbers, there's a difference in between, at least in my experience, how somebody that's just an enrolled agent, how a CPA and a tax attorney may kind of look at the things and their expertise on how they would know tax codes and where to, like you said, you have to play within the rules. And so some people bend them really hard. Some people don't bend them as much. There's like, the rules give you lines to play in. And so what's going to be my experience between an enrolled agent, a CPA, a tax attorney, and just taking it down the street to, H&R Block?
Okay. Well, that's a big comparison there. Now, the enrolled agent's license One of the benefits, there's a few of the benefits to that license that like attorneys and CPAs don't have. One is, I already mentioned, your ability to practice in all 50 states, in the tax world.
Mm-hmm.
Another advantage for, I would say, the person who is hiring an enrolled agent, and so the license itself, to get the license is, well, there's two ways to get it. You could have worked for the IRS for 5 years, I believe. That's what it used to be. I'm not sure what it is anymore. Or you can pass an exam. Okay.
Mm-hmm.
But the exam, let's just take it from the exam track. I mean, if you worked for the IRS, we can assume you focused on tax, a lot of it.
Yes.
And so so let's just talk about it from the standpoint of the licensing, the exam track, licensing by exam track. And that would be, so the entire exam is tax. It's all tax. And like day one it used to be 4 parts. I'm not really sure what it is now, but I'm presuming it's the same. But it would be 4 parts. The first day would be individual taxation. The second day would be corporations, or it wouldn't be the second day, it'd be the afternoon. And then the second day in the morning would be partnerships, estates, and trusts. And then the afternoon of the second day, exclusive tax, and enrolled agents have to take 72 hours of continuing education.
I'm sorry. I hate to do this. I got to cut you off. I had a technical error for a second, and I dropped you. I apologize, audience. I apologize to you. You had just started talking about the second day and how that was going to be the
okay,
whatever.
No
If you go back to there, and I apologize.
Well, the first day is individuals, corporations, the exam. The second day is partnerships, estates, and trusts in the morning, and the afternoon is all the ethics and regulation of practice. And then every 3 years, an enrolled agent has to have taken 72 hours of continuing education in tax.
Oh, wow.
So it's entirely tax. Now, that's actually, of the licenses I possess, that's the one I've had the longest. That's where I started. So, but then to become a CPA is a whole different, mind you, the enrolled agents or EA exam, or to become an EA, you don't even need to have a college degree.
Mm-hmm.
Okay. And now to become a CPA, there are some ways to get a CPA without a college degree, but it's pretty rare. It's usually you go to a 4-year college or university and you make sure you take enough of the courses that you would need to sit for the CPA exam, because sitting for the CPA exam has education requirements, and you have to have had so many semester hours in various aspects of accounting. So that's one of the differences. So I wouldn't say that CPAs are more educated necessarily than EAs, because EAs have all different types of backgrounds, oftentimes. But with the CPA, they're really educated on the numbers,
mm-hmm.
on accounting. And when I say accounting, that involves, all these different tools that you have in place, methods of proving that amounts are correct and balancing things, and having possibly a more in-depth look at the numbers themselves.
Okay.
You know, uh, so so it does bring, the CPA does bring a different perspective to the taxes for sure. Like especially to a tax return. Things like materiality. That's something that is part of what you learn when you become a CPA, and what's material and what's not. And I think that even though for the enrolled agents exam, there's that ethics portion, to become an EA, and to maintain the EA license, you have to take ethics as part of your continuing education. So too with the CPA, but somehow when you study CPA ethics, it goes into a lot of things that, like, you'll cover things that involve corporations that are like public corporations that have audits,
Mm-hmm.
and you learn about independence and things like that. So it brings a different perspective to the tax arena, for sure. And I always felt like the in-depth working of numbers and formulas and things like that are part of becoming an accountant. Those are very handy as tools of the trade, so to speak.
Okay.
To make sure your returns are accurate and make sense. So
Okay.
I think that's what sometimes you might see that lacking sometimes. Not all enrolled agents, but some, where you might see that lacking, where there's certain things that are obvious that these numbers should have agreed and they don't, and why don't they? That type of thing. Various checks and balances.
Well, it sounds like I can, if I have my bookkeeper doing my stuff, right, I can bring my profit and loss and I bring that and I drop it off with the enrolled agent and they can make my taxes happen. Whereas the CPA is going to be able to do the job of my bookkeeper as well as process my taxes. You get like 2 in 1 instead of 2 different entities.
Perhaps, but a lot of enrolled agents are bookkeepers.
Okay.
So, and a lot of CPAs don't want to do the bookkeeping, and they say, just bring me the books that are completed. I'm the expert in tax, let's say, and just do that. So,
okay.
But not to become a CPA, of course. You have to have the education requirements. Then you have to pass an exam, and that is also a 4-part exam. And I can't remember specifically the parts. Well, there's auditing, there's the business law part, probably financial statements is one, and why can't I remember the other? But like compilation and review maybe is one section. But in any case, there's very little tax in the education to become a CPA, and there's very little tax in the exam to become a CPA. But nonetheless, the regulations allow CPAs to do taxes. I mean, that makes sense. And so a lot of if CPAs are really good at tax, it's because that's what they specialized in. When there's a lot of different avenues you can take as a CPA. Not all CPAs are tax, and not all CPAs are do accounting, so to speak. Like me, I don't really do accounting anymore, so I just do tax.
Okay.
So, and that's an area of being a CPA that you can specialize in. So,
okay.
But just because someone is a CPA doesn't necessarily mean they know anything about tax.
Okay. Okay.
So,
Well, and then the last part is, where does the tax attorney come in, right? Like, if it still feels like there's kind of levels to it, right? Like, with
yes.
each one you get a little bit more specialized, and if the tax attorney is going to know tax code, like that, it seems like that's the creme de la creme. But do I necessarily need that if I'm doing, $300,000 in revenue, or is that when I have 10 million in revenue, tons of employees, multiple corporations and LLCs, and like, where does this tax attorney role kind of come into the picture?
Well, before I answer that, I would, let's talk a little bit about becoming an attorney.
Mm-hmm.
What's involved with that, and how that relates to tax. Okay, and so to become an attorney usually involves, getting a law degree first, and then it involves sitting for a bar, which is like the CPA exam. That's a state-specific exam. It's not a national exam. However, the CPA exam is the uniform CPA exam, and they've made it a lot easier that if you're licensed in one state, you can get licensed in another state, like through reciprocity for the CPA. Attorneys, okay, you have to go to law school, or usually there's some states that allow some other ways to become a lawyer, but most people just go to law school. And then you have to pass a bar for whatever's, a specific state, or the District of Columbia, let's say. I shouldn't have used that as an example, because you don't really have to sit for the exam in District of Columbia. You could be licensed anywhere else and get licensed in Washington, D.C. through reciprocity. So that was a bad example. So it's a state-specific exam, but law school, there's no tax courses. There are tax courses, but you don't have to take them. If you take tax courses, they're electives in most law school curriculum that I've seen. So if you're thinking like I was, because I was already in the tax profession when I went to law school, I was taking tax electives because that was my, where I was, the direction I was headed as a tax attorney. So, but there's no, just because someone's a lawyer doesn't mean they know anything about tax, and most of them don't, and are readily admitted. Any one of the professionals who don't know, something, or, are not competent in a certain area should not pretend they are. That would be unethical. So becoming, having an attorney doesn't mean they know anything about tax. But there is, unless they, like a CPA, specialize in it, say after they graduate, or maybe were destined to be tax attorneys. Because a lot of lawyers have backgrounds in accounting and tax already, like I did. Mm-hmm. And so some of those, will be probably good tax attorneys, So, but you don't really know that for sure with an attorney on their background. But there's also a lot of attorneys will get a Master of Laws degree after they get their Juris Doctorate degree. The law degree is the Juris Doctorate, or JD, and you can get a Master of Laws, which is called an LLM, and then that could be in any subject. And if you have an attorney with an LLM in taxation, then they know, usually are going to know their stuff about tax. So, in my case, I had this tax background. Prior to becoming an enrolled agent, I was a licensed tax preparer when I was in California, and then became an enrolled agent. And then I built on that with the CPA and the attorney.
Mm-hmm.
So I was, so like I said, when I was in law school, taking tax courses when I could for electives. And so I don't know if that answers your question, but that kind of gives it the whole background.
When am I going to want to bring them in? Like, why do I want to use like, what would I need the tax attorney for? Like, what am I going to go to that level of expertise?
Well, there might be a few different reasons, but one would be because you want that level of expertise, let's say, or you want that perspective because becoming a lawyer gave me another perspective,
mm-hmm.
a much different perspective. Let me tell you, that was much broad, more broad. That you see things differently with the law, the regulations, how all this works. Sort of what things you can, for lack of better terms, I don't know how to say, but that are, let's say, less risky positions
mm-hmm.
on your taxes than others, or someone who can really evaluate the risks and analyze, the law, and analyze the risks and benefits, though, and discuss them with you to help you decide how you want to proceed and what risks you might want to take.
Mm-hmm.
Or, I represent a lot of people who, like you had previously, they owe the IRS, and IRS backs them into a corner, and they're not sure what to do. They don't understand how all these rules and regulations work for, IRS collections. That's a whole other. That's its own division within the IRS.
Yeah.
And so, someone who's like, I don't have the money, they want to take my paycheck, that kind of thing. Help me.
Mm-hmm.
That's what they're saying. So, and knowing how the IRS works and having the experience helps to know how to talk to them, to the IRS.
Okay.
Like, I've been at this for, I think, 34 years, going on 35, something like that. And I oftentimes will tell the IRS person, if I'm doing my job, I'm probably going to be helping you with your job. So, I understand what we're trying to accomplish here, what you're trying to accomplish here. And I'm here to help this person get into some kind of resolution of this matter. And that will, that helps them. They like that. That helps them close a file because they've got a lot of files and they've got a manager breathing down their necks, get these files closed, collect these taxes, And so if they could get a case resolved, it's just, one more case resolved.
Mm-hmm.
And for them. And so when I make it clear to them that when I'm doing my job, it will actually help them and make their job easier, and they understand that, they work with me, and we try to get things done,
mm-hmm.
And usually do.
Okay. It just gives you that next level of expertise to really be able to handle the situations better. Like I said earlier, right? There's like, the IRS is very wishy-washy on things. I mean, you can just go look up how to define a subcontractor versus an employee, and you'll discover very quickly that the line is pretty like blurred. And where do we play within this? Like you could go either way in a lot of situations, and it just depends on who's interpreting it at the time. So it really sounds like the tax attorney route gives you the best way to play within the lines safely and make sure that you have yourself backed up, right?
it might depend on your needs,
Hmm.
but one of the, as you were speaking though, if I can comment on what you were just saying, is it's the gray areas, it's, I think as an attorney, you start seeing the gray areas better.
Okay.
I mean, there's some, don't get me wrong, there's some CPAs who are extremely sharp and very aggressive, but the attorney in me would say maybe that's being a little too aggressive or careless. You
Hmm.
have to be careful. So, but anyway, so
Okay.
now one of the other reasons you can hire, you might want to hire a tax attorney, as part of it, your strategy or whatever is that if you can, like for instance, when I am preparing tax returns for clients, I think of it like I'm wearing more of my CPA or EA hat. But believe me, the attorney is watching over.
Okay.
So, so you get that, but because I always think about it. I don't know. I haven't really spoken with anybody about this, but in any great detail. But I always thought, because of all my credentials, it might just scare people away to just assume that I just cost too much,
Hmm.
And I always try to be competitive. In fact, I've always tried to, if I can, be competitive with H&R Block
Okay.
when it comes to tax returns, So, yeah. So, I mean, tax returns, it's a process. And if you can do that, streamline it and do it efficiently, you keep the cost down. I try to do that.
Okay.
And I don't think of it as like, well, I think of it more as, I'm just doing a tax return like I've been doing for the last 35 years, which means I'm not really thinking of it as a lawyer engagement. I'm thinking it more as, a tax return, like when I was just an enrolled agent or as an EA, CPA, that kind of thing.
Hmm.
So,
Okay. No, I think that
so yeah,
that that helps and breaks it down and gives a direction of, you can go and find the person that's going to fit not only your budget but your level of your level of comfort, like wherever you're comfortable, you can find somebody to fit that within. And so you're going to get kind of different expertises within each route, and then you can take it from there. So I want to change directions a little bit. And
well, let me just add, if I may, just add one more thing.
Mhm.
The other advantage of having the attorney involved, or is that, like if you have a business, for instance, and you've got, or just even an individual, like what if you need, maybe it's advisable to have a trust, or maybe it's advisable to turn your business into an LLC, or maybe elect to be an S corporation.
Mhm.
Those types of things. Or you want to set up a new LLC, that type of thing, or I need a partnership agreement. Well, that the attorney part, brings that too as well.
Okay.
So that you have someone you already know and trust, who's very familiar with your situation, who could, produce something for you, certain documents or legal instruments that, at a relatively low cost, and make it easy for you.
Okay.
So that's one of the other advantages, of course.
Well, that's a great segue, because that's where I want to go. Is so I personally would never operate as a sole proprietor and have everything out on the line that I own. So obviously the invention of the LLC in America is a great thing, and it does limit your liability in some situations. But then there's a lot of people go and will keep their LLC, but then file as an S corp because it can help save taxes in certain situations. So you see on these, like, I'm in a bunch of like online communities for flooring, and people come along and they're like, how do I set up my business? I'm just getting going. And all these flooring installers come along and they're like, well, my person has me as a, filing as an S corp, be an S corp. And I'm like, whoa. I was like, why are you asking flooring people tax advice? Because that's wrong. Don't do that. That's not our specialty. Like, ask us about floors. So I have the expert. So how do I know when I want to go from being an LLC to filing as an S corp, or maybe there's a reason that I need to become a C corp? Like, how do I start making these determinations, and like, what's the advantage to this S corp thing?
Okay. Generally speaking, I mean, if you're going to have a trade or business, and how do we define trade or business? I mean, I think, the IRS has a definition for it. I don't know that off the top of my head, but, where trade or business, where you're doing, if you're doing flooring, it's considered a trade.
Correct.
It's a trade or business. Okay. So, I have a law, CPA, EA practice, whatever. It's a trade or business. Okay. So, it's usually when you're doing some kind of work to make money, as versus like a rental, which is technically not a trade or business. It's an investment property rental, that type of thing. It's not the same. Okay, got that out of the way. So generally speaking, trade or business, I advise you become an S corporation, and I'll tell you why. But when do you decide that? Again, it's kind of on a case by case basis. I would ask you, Kyle, how many years you've been in business. If you've been in business for a while, I want to see your tax returns from prior years. And then right there, let's just focus on that for a second. And then I would look and see, well, if you didn't have an LLC, but you've been operating as flooring, I'm presuming you were operating as a sole proprietor, maybe not, but that would come out, of course, in the conversation. But I think in your case, you said you were operating as a sole proprietor, and that's usually what people do. They start as a sole proprietor, and they realize, wait a minute, there's a better way, and which is what we're talking about. And so we would look at those prior year returns, and I would say, look at the tax you incurred because of that business. Especially the additional tax called self-employment tax, which is Social Security taxes for self-employed people. And when you have a job that has a W-2, where you get a W-2, there's Social Security withheld from your paycheck, but that's actually only half of it. The other half of it is paid by the employer. They match it. Well, when you're self-employed, the self-employment tax, it's Social Security tax for the self-employed, like I said, but you get to pay both halves because you're not only the employee, you're the employer, you're both. So, which is self-employed. So people, and it's taxed, that amount, which is 15.3% on approximately 92.35% of your net earnings. Like almost all of your earnings are subject to that tax. Your net earnings after expenses.
Okay.
Now, an S corporation, you take the same numbers and put them on an S corporation return so that the net income is exactly the same as it would have been on your, as a sole proprietor, which incidentally is a Schedule C. So if you're Schedule C, that in prior years, you take those same numbers and put them on for any year, and put them on an S Corp, that net income is not subject to self-employment tax at all. Okay, but so you see, well, you think, well, that's a no-brainer, right? Because you'll save all that tax. Well, it's not entirely, the whole thing, it's too good to be true. Well, that's kind of the case here, because you do have to still consider, if you're working in the business, that it's subject to Social Security taxes. So when you're an S Corp, though, you would be an employee of the S Corp.
Mm-hmm.
So it's more or less, you're still self-employed, but technically, legally, you're employed by your S Corp that you created. And and through, you would have to pay, as an employee, you should be getting paid some kind of reasonable compensation for the work you do. So you would want to put yourself on some kind of a salary that would make sense for what you do, and pay Social Security taxes on that. But the rest of it, the additional amount, is just like investment income, and it's not taxed. It's not taxed for Social Security. It's taxed for income.
Mm-hmm, mm-hmm.
Everything's, but it's not taxed for Social Security or self-employment tax. So, if I could give you some kind of simple example, let's say you had your flooring business as a sole proprietor reporting on a Schedule C, and you had net income, just for sake of discussion, of $100,000.
Mm-hmm.
So, bear with me a second here.
Okay.
So if you had net income of $100,000, you would, it would be $100,000. Then you would take 92.35% of that and multiply that times, which is 92,350 times 15.3%, and you would have over $14,000 of self-employment tax.
Oh, that sounds fantastic. Let's do it. Sign me up.
Yeah, but if you were an S Corp and you determined, well, 50 grand would be the appropriate salary,
Mm-hmm.
On that, well, then you would basically it would be 50,000 times 15.3%. You don't do the 92,350 part. You just do, and so you would end up paying half that. You would cut it in your tax liability in half.
Mm-hmm.
You would save over $7,600 a year in Social Security taxes.
But you're still paying some tax on that other percentage that you're not taking as a salary. You're paying.
Oh, you would pay income tax. You pay income tax on it, whether it's self-employed or S Corp. You're
Mm-hmm.
still going to pay income tax.
Correct.
Yeah.
So you're taking the advantage of the S Corp is that you're setting up your company and you're putting yourself as an employee. You're taking a reasonable salary, which talk with your professional about what reasonable is for your business, and then the rest of it comes out as member draws directly, and it's essentially you're pulling the profit out of your company, and so you pay a lower amount on. You pay less in tax because you're pulling out profits instead of the pay.
Well, because the you take 50,000. Say you had the 100,000 net income, but now you take 50,000 in salary. That's a deduction. So then now your net income is 50,000
Mm-hmm.
instead of 100. From the business itself.
Yeah.
And that 50,000 is treated as investment income. on your individual tax return. It passes through
Okay.
to your individual return. Yeah. So, and now the thing is, though, is, traditionally, or, prior to the LLC, people would set up corporations and make them S corporations, but corporations are more difficult to maintain on the state level for, like the legitimacy of it and the legality of the entity itself.
Mm-hmm.
Corporations have more requirements than LLCs do. The whole idea of the LLC was to provide that protection, limited liability protection, like you would have with a corporation, but make it simple, for guys like you and me to be able to just set up a business with that kind of protection without all these requirements and, being so complicated to maintain its legitimacy.
Yeah,
So,
I don't want to have I don't want to have board members and board meetings and keep board minutes, and like that's a lot for a little company to handle.
Exactly. Now, but here's the thing, and this is important, is that somebody may say, "Oh, okay, I could go set up the LLC and do that," but that's not enough, because if the IRS wasn't sure what they were going to do with LLCs, and they finally came to when they first started coming out, and so they finally said, if an LLC has 2 or more members, we will treat it as a partnership for tax purposes as a default. Now, if it's only one member, which is referred to as a single member LLC,
mm-hmm.
then the IRS says it will disregard it. For tax purposes. So in other words, they say it's a disregarded entity for tax purposes, which means if you're just an LLC, and that's it, a single member LLC, then you're still a sole proprietor for tax purposes. So you haven't alleviated this problem with the self-employment tax. But if you're a single member LLC and or if you're any kind of LLC and you make an election to be treated as an S corporation, then your LLC all of a sudden is an S corp.
Mm-hmm. And it's easy too. It's a single sheet of paper for your professional to fill out. Correct?
It's actually 4 pages now, and there's it's actually a little more complicated than it used to be, and so people might have questions about it. There's some parts of it that most people don't even need to fill out, but you don't really know that
mm-hmm.
necessarily. So I would say if you're doing it yourself, to definitely read the instructions carefully.
I don't recommend that at all. Go hire somebody. Pay them the little bit of money they want to save you all this money. It'll pay for itself, I promise.
Yeah. It isn't that much, and then you have the advice along the way too that goes along with it. But yeah, so you would just that's what you do. You make the election with the IRS, and you could change your LLC to an S corp. So, but there's timing issues with that. If you've already been operating as a sole proprietor, there's another election you have to make, is to change the way your entity is being treated, and then make the S to be. You would make an election for your single member LLC to be taxed as a corporation, and then follow that with another election to be treated as an S corporation. It's actually 2 elections in many instances. So, yeah, it's I know I'm the guy who gives that kind of advice, and of course I'm going to say, yeah, call me. But I'm I'm not saying it. I'm saying it because it's probably a good idea to talk to somebody to get some good advice on it.
No, I
So,
agree. So there's definitely a benefit to being able to have an LLC that files as an S corporation. You can get savings on the amount of taxes you're paying on payroll taxes and how you're able to pull money out and have that tax. So talk with, if you're not set up that way, talk with your professional and get their advice and find out what they recommend for you, because not all situations are equal, but it seems to be, generally speaking, this is the way that a lot of LLCs are pushed to go, because it does help the owner long term, especially if they have employees on the books and stuff like that. Like, this can just help you run. You get more money in your pocket ultimately, and who doesn't want more money in their pocket?
yeah, and I've seen it though, honestly, where people come to me because they have IRS collections issues. They owe money, similar, arising under similar circumstances as what you described when you were in the, what did you say, television and film business. And they owe money, and I look, and they're an LLC, but they're a single member LLC, and it's being reported on their individual tax return as a Schedule C, subject to self-employment tax. So, like the LLC, I'm not sure what the purpose was in those instances, but that was something, that I advised right away to correct. And in some instances, they even had somebody who prepared the return, and I don't know whether I can only presume they did not advise them because nothing was done. But that's not always the case. Sometimes we can advise people and they don't do anything. So the old, you could bring a horse to water, but you can't make him drink.
That's it.
Concept, yeah. So I don't know the background of those instances, but I was often surprised to see single-member LLCs not, doing anything more than that and just reporting it like they were a sole proprietor.
Yeah.
Because that's exactly what they were still for tax purposes, as far as the IRS was concerned.
Bad advisement. All right. So sadly, I could pick your brain all day, but we are quickly running out of time. What's some quick tips that we need to run our businesses more effectively and run into less problems come tax season, or just dealing with our taxes in general? What's some quick tips to put more money in our pocket and make I don't want to dread April 15th. I want to just be able to float right on by it.
Well, to start, I would say keep good records so that you have accurate information, which, is not all, keeping the records is not always that easy. So it might involve having a bookkeeper, hiring a bookkeeper, and you want to make sure that they're keeping up on it. If they start neglecting it, then you might want to look for somebody else. But so keep good records so that that information, the information the records contain, is accurate. So you could look at it in somewhat of a timely manner, not too long after the fact. And so you could look at it and be able to, to see a lot of things about your financial situation, see where you're spending, where you're not, where your revenues are from, where they're not, things like that. So it can certainly help with managing your business and directing it into a more profitable realm. That would be one thing. But then it also, with all that correct, accurate information, it helps for planning too. Gee, how much tax will I need to set aside, or should I be paying? That's a factor in what your payroll might be, because when you set up an S Corp and you're on payroll, then you probably want to make sure your W-2 is not probably, you do want to make sure that your W-2 is withholding the correct amount.
Mm-hmm.
And you can actually, do some strategizing with that. And then, with correct, accurate numbers, financials of your business, and everything else for that matter, then it also helps for planning in terms of, like say, retirement plans. Do we have room here to put money into retirement? Is there money available to do that? Or money to invest to maybe shelter some tax legally, through what legitimate means there still remain in the tax code.
Mm-hmm.
So that would be my first piece of advice would be.
Well, it sounds like everything starts with good books. If I don't know what I'm making, why I'm making it, how I'm making it, I can't really make any other determinations of what to do with my money, because I just have a bank account full of money, but I don't know where it came from, where it's going, and what, if I don't know, I can't do anything with it. So
yeah,
I think that sums it up nicely.
The thing is that task, bookkeeping, it's tedious. It's a tedious task. It's not all that easy to do for someone who's busy and doing a lot of other things. So that's why bookkeepers are never out of work. So and they're good ones are sometimes difficult to find.
Yes. It's not just about entering numbers into a spreadsheet or into QuickBooks or whatever it is. There's a lot more to it than that, of knowing what numbers go where and why, and keeping it organized. And you're right. Good bookkeepers are hard to find. I can find somebody to enter numbers into a system, but if they're not entered correctly, I'm not going to have the right info.
Now there are bookkeepers who are CPAs that they're not, they don't do tax work at all. They just do books, and I like them.
I bet.
because if they have a CPA, they really know accounting, and it's very easy to communicate with them about a client's books.
Mm-hmm.
So, yeah.
All right. Well, I thank you for your time. I thank you for your expertise. I think this will get some people pointed in the right direction, able to make a little bit more, some better decisions about their business and how they want to handle it. Where can people find you, reach out to you? How do they, find out what you got going on? Any plugs or anything like that?
Well, I'm kind of old school, and I've been rather busy, and so I haven't found the need for social media marketing or any of that.
Mm-hmm.
So I still have a phone number, and I would just give, because this could be listened to, but I'm not sure where your listeners are, but I have a toll-free number, which is 877. The toll-free number is 877-559-4900.
All right. That'll do it. I have listeners from all over the world. In fact, I don't get a lot from South America, but there's some people in the Europe, Asia, Australia, Canada, North America. I get listeners all over, but definitely, most of the listeners are U.S. based, and they are from all 50 states. So there's I like to make sure that people are out there. I've actually been contacted. Recently, my bookkeeper let me know that somebody listened to the episode from California, and she will now be doing his books. So
Oh,
you never know what's
wow.
going to happen. It's a crazy world.
So I'm not sure if I should leave. I'm not sure if I should leave an email address, or will that just like possibly clog my inbox?
I don't know. You can leave whatever you would like, and if that's how you're comfortable. The phone number is fine if you want to leave an email and somebody email. I don't think it'll clog your inbox, but you might get a question here or there. Somebody might be like me and say, "Hey, John, I do this podcast, and can you come on and be the professional about taxes?" Like you might get a tax question here or there, and
okay. Well, here's I'll give you this email. It's JD as my initials, John DiArco, JD at taxprojd.com.
Okay.
So it's JD at taxprojd.com.
Perfect.
Yeah.
All right.
And, anybody has any questions, if I can help, give me a shout.
Sounds good. John, thank you so much for your time. I know it's very valuable. I know you've been very busy, and even us coordinating our schedules has been difficult. So thank you so much for your time. Thank you for coming on the show and, like I said, giving your expertise and advice and trying to help point people in the right direction so that they can be more successful and profitable in the future.
Thank you, Kyle. I enjoyed the experience.
Awesome. All right, sir. Thank you very much.
Okay. You take care.
You too.
Bye-bye.
Bye. That's all the time we have for this week. To keep the conversation going, head on over to the Floor Academy Facebook group. Be sure to subscribe so you can hear each and every episode. We can be found on Apple Podcasts, Stitcher, Spotify, iHeartRadio, Google Podcasts, and most major podcast directories. Don't forget to leave a review and let us know what you think about the show. If you would like to be a guest, have questions or feedback, you can email us at flooracademypodcast@gmail.com. You can help support the show by becoming a patron over at www.patreon.com/flooracademy. Remember to learn while you earn.